Hey guys, what's up? Hitori here. Welcome to episode 45 of the weekly market outlook with Trade Prop, where we dive into the latest trends across asset classes such as the US dollar, stocks, gold, oil, as well as the economic pulse driving it all. Without wasting any more time, let's get straight into the video. So, first off, let's take a look at the US dollar. Right here, we have the US dollar on the daily chart, and pretty much it had a quiet week, right? We started the week right here, and you can see it hasn't really moved much for that week of last week. So we are coming now into pretty much the later half of May, and soon it will be June. Okay, so let's kind of review what we saw last week right here. So we had a bunch of data come out, including CPI as well as PPI for the US dollar, and inflation data pretty much stole the show, where we saw both CPI as well as PPI showing cooler than expected inflation, right, which is a bearish signal for the dollar, since lower inflation, it typically boosts the odds of a rate cut by the Fed. Looking at current sentiment, by September of this year, there is a probability that there is a 70% chance that we could see at least one cut and a 20% chance of at least two. Of course, we have the current trade wars ongoing, and that's actually keeping things interesting, with the overall just positive vibes supporting a dollar rebound. Though US-Europe negotiations are still pretty shaky, we could expect some choppiness ahead. So that's what we saw for last week for the US dollar. Upcoming next week, we also do have some interesting news releases for the US dollar, mainly unemployment claims as well as PMI for both the services as well as the manufacturing parts of things. And for pound, we are going to be seeing the year-on-year CPI. So curious to see what these metrics show for these respective currencies. But let's get straight into the charts real quick. So right here we have the US dollar index, and at the moment we are seeing kind of a pause, right? We're seeing price kind of stagnate. Why is that in white? All right, we're seeing price kind of stagnate around here. I think I forgot to pull up the indicator. It should be in black. Yep. So right here we are seeing us kind of just pause around this area. And last week I did mention in the outlook that I would like to see price kind of break and hold above the 100 mark. Currently, though it hasn't really done that, we did see a clean break above it, but then we immediately came into this area of resistance, which I also did highlight last week, that we could see price get a reaction off to go bearish. But with the CPI release recently, last week, I don't think that we're going to see a very expansive move higher for the dollar. I think we could start to see us base around pretty much this area. But if things start to look good for the US economy, even with inflation data being kind of cool, we could potentially see price climb higher and higher into this region right here, and potentially even retest the 200 moving average for a potential retracement lower from here. Okay, so at the moment, still pretty neutral. I can't say that I'm very bullish, nor can I say I'm very bearish. We're just kind of chopping with this really ascending channel, which I don't typically trade, but it's more so to kind of visualize for everyone what the market's currently doing, which is just chopping slowly crawling higher. Okay, so definitely still an area of interest next week to see if we could come up and retest this EMA, or if we just start chopping between these two levels right here. We could even come down lower into this overall current leg before continuing to see price just bounce back and forth. Okay, so definitely do expect some choppy movements. Okay, so definitely just stay cautious on the dollar until trade clarity emerges, or until we get some very convincing reasoning for the fundamental sides to push things higher or lower. Okay, so that's pretty much it for the US dollar. Do keep in mind that we have some news releases that we went over just now about the USD coming up next week, so keep that in mind. Yep. So next up we have indexes, right? Let's pull up the S&P 500 right here, and the market's buzzing, right? We're seeing price just steadily climb higher. I did mention last week that we wanted to see price kind of break above and then retest it to bounce higher, because technically I do think currently we are in kind of a risk off sentiment. Sorry, risk on sentiment, because we are seeing risk off being unwind. And wow, we literally just saw price open here, and then we just saw completely bullish days. Unfortunately, we didn't get to see that retest that we wanted to happen. I wanted to see a movement like this, but S&P 500 is just pushing higher, right? So as of now, we could potentially come into this area, which is pretty much at all-time highs for the S&P, of 6.1k to 6.6k. This area of resistance, we could come up and then push lower from here, or we could break it, come back to retest this area of structure for a break and retest trade. Okay, now do understand that when everything's looking kind of bullish like this, right, you have to look at a potential sign of the market exuding that strong vibe of greed, right? So when everything's looking too bullish, you kind of have to look at it and then be like, this looks a bit very suspiciously. Do I want to be looking for longs from where we currently are back into those levels? And that's a question that you have to ask yourself, based on your strategy. But if you ask me, on a longer term perspective, I would like to see price kind of do a pullback into this level, and I hope that we are going to actually be seeing some support being formed. Okay, this is what I would like to see the market do. I want price to kind of correct some of this. It's not exactly too expensive, crazily, like some moves that we see on gold or what we saw over here, but I want to see prices convince me that it's going to hold this bullish leg higher into all-time highs before just taking longs pretty much in the middle of nowhere right here. Okay, because if you take a long here and price pulls back, it's like, oh, yeah, it's doing a pullback, but I'm long and now I'm cooked. So I always am kind of a risk adverse person. I would prefer for the market to show me something like this. I can get in on the pullback and for price to push higher. And currently I'm expecting a pullback from here. The risk reward also isn't looking too good for the S&P 500 anyway. Longing here, where's the stop's going to go at, right? Probably this previous low right here, forming this potential range. But at the same time, it's just not too convincing, right? 3% off of the previous all-time highs compared to your potential downside risk is not too attractive. So definitely, I'm waiting for us to pull back into something, maybe this support right here, before continuing higher into all-time highs, right? That's what I'm seeing for the S&P 500. Let's take a look at the NASDAQ. Same story across most indices, I'd say. I want us to pull back to retest something before moving higher, seeing as this is just too suspiciously bullish for me, okay? Same thing goes for the Dow Jones. Let me pull this up. Same thing, right? In fact, the Dow Jones is relatively weaker compared to the S&P and the NASDAQ. We did kind of see a big bullish push above that level, and we saw a pullback tapping this area of support I mentioned last week, and then we saw this continued bounce higher. Okay, so across the indices, it's pretty much the same story, right? S&P 500 and the NASDAQ, I'm expecting a pullback. We did see that on the Dow. So technically, the Dow could just thread higher, while the S&P and NASDAQ potentially does a pullback. So be aware when you're looking at these asset classes like indexes, which are really correlated. Definitely, if you're looking to long the S&P 500 and the NASDAQ, it's not a bad idea, but wait for a pullback, right? It's what I like to put out there. Okay, patience definitely might pay off in these kind of scenarios. Okay, so take a look at gold. Right, so right here, gold actually did see us base around all-time highs. Last week, we even formed this area of resistance around 3.4 to 3.2k. So at the moment, without fresh catalysts like trade war fears or tensions being escalated, right, gold could potentially thread lower from here, or it could just base around here pretty much, right? It could just trade sideways from here, not showing any movement higher or lower. But definitely, I do think if you remove all my indicators real quick, I do think that we could potentially come down to wipe out all of these, not all, but some of these gains, right? We could correct maybe even down into this recent leg right here. If you draw like a fib from the swing high to a swing low, you could even see price correct down lower into this area of discounted pricing based on the current swing high and swing low trading leg. But of course, that is, and we are currently actually in discounted pricing, but who's to say that we won't trade lower, right? Do we have some clean candlesticks right here to the left hand side that we could definitely see price continuing to correct lower? But either way, let me just remove this. Either way, we might be caught between these two price points from 2.9k to 3.4k for quite some time, right? We could be trading within these levels while the 200 EMA catches up, and we could see a retest of that to potentially bounce higher. Or if we do break that 200 EMA, we could see price respect it and then continue move lower, indicating more of a profit taking and potential trend shifting movement. Okay, but either way, for next week, this is currently where all-time highs is at. Let me just draw that right here, which is around 3.5k. It's where current all-time highs is at. We could see price third higher, respect this level, and then you could get a good maybe intraday or short-term movement to take out this low. Or if you just keep trading in between these two levels, you might not want to take a trade based off of just the AutoUFOs indicators if you do use them. But definitely, if you do come down to any of these levels or even come up to this level, you could take longs here or shorts here depending on if your trade setup appears. Okay, if we do come down to this level, I'll definitely expect some reaction, seeing as it is also the extreme of the current trading leg for me. Okay, so that's what I'm looking at for gold. Currently still pretty much neutral, just waiting for it to kind of have a big spark to either reclaim its highs or to, you know, fall into oblivion and then continue erasing some of the gains it made last year and early this year. Okay, so that's what I'm looking at for gold. If you take a look at WTI crude oil on Blackpool, what we're seeing is that it potentially looks promising, right? We're seeing strong retail sales, solid PMI data, and also upbeat jobs data, which is currently fueling just overall optimism, right? Lower inflation and potential rate cuts also adds to this current bullish case that we might be seeing for oil. So at the moment, we are retesting this area of support at around the $54 to $59 mark right here. The next area of resistance being plotted is around the $70 to $71 mark, but it is quite obvious that we are also trading into this area of resistance around the $64 mark. So at the moment, if we do see a clean break above this general area right here, let me just use a line to maybe mark it out. Oh, line right here. If you see a break above this area, we could see price continue heading higher into this area of resistance and into the 200 moving average. Definitely expecting this to potentially happen if we get a strong close above, unless, you know, of course, unless a global recession hits, then downside might happen, but at the moment it's not really looking too likely, I'd say. I would still prefer a hold of this level and then a breakout of this level to take us higher, right? That's what I'm expecting currently for crude oil, with all the fundamentals also pushing it higher. It's looking like a pretty solid either short-term or long-term to mid-term trade. Right, so I'm looking at for oil. So that is it for oil. Let's take a look at Bitcoin and Ethereum. So right here we have Bitcoin pulsing higher. We are currently also trading pretty close into all-time highs right here. Technically this is the all-time high. If I just mark this out, all-time high is at 109,000, right? But we're coming into this area of resistance right here at around 106, and I know that there currently isn't any areas of resistance being plotted out because we have tapped this area and we have pretty much filled of the unfilled orders or potential unfilled orders that were residing in this area, right? So technically right now we could see a potential pullback lower, correcting some of these moves before continuing higher, seeing as we are currently going into a risk-on scenario for the economy. I think we are poised to do a pullback of some sort into the 93k to 97k mark to do a kind of like a break and retest, or really just like a pullback and then a retest and move higher into potentially taking out all-time highs. But who knows, right? We could also just base around here just before all-time highs, and then any pullback could induce people panic selling their holdings, and then that will cause people to have a lot of exit liquidity right here for us to target. Okay, so still bullish on crypto. I was definitely shocked with how bullish all of a sudden we were, in the middle of April, technically the end of April, and then just making crazy recoveries of around 27% in around 27 days, so around an average of 1% per day. Okay, and this is what I would say is a very healthy leg, right? We have price push higher, we based, push higher again, and then we based, and then now we are pushing higher and then basing, right? So I want some kind of pullback to really get involved long again. Be it, when you trade crypto or if you invest in crypto, this is a move I want to get into for longs. Taking a look at Ethereum, really, on Coinbase, we are facing some issues, right? We are breaking above the 200 EMA and we're holding the 200 EMA, but we're also coming really close to the next area of resistance around 2.8 to 2.7k. So we could see some short-term movements lower. I am expecting price to kind of retest lower into this area of 2.1 to 2.4k. I think it is needed, which is why I actually took a short last Thursday based on a technical model of mine. It is not backed by fundamentals, it's purely just a technical model. I'm currently in a short right now as we speak as well, around somewhere here, and somewhere here, I think, yeah, somewhere here, and it's riding lower as we speak. So I do think we could come lower into this area before that bounce, which is also where I'll be taking partials off of the position and making the trade break even pretty much. So yeah, I think that's pretty much it for this week. From dollar just potentially being approached cautiously, not going anywhere, and oil's potential breakout to right here crypto. Can Bitcoin make all-time highs again, or is this just too early and not enough momentum to push trade higher? That we'll review that again when we come back to the next episode, which will drop next Monday. But until now, take care, stay safe, peace out.